I'm gonna go over what I'm gonna do with my portfolio in the next couple months, and it's gonna be very interesting. I'm gonna show you exactly what I'm gonna do and how I'm gonna make more money with my portfolio. So as we can see that this is my main portfolio with my long-term holdings with my stocks and ETFs. And this cash position I've been holding on for a really long time. So it's just been sitting here collecting 4.7% in interest. And I'm going to do something with this that I've been experimenting with for a couple months now. So if we look at my Robinhood real quick, this is where I've been selling options. Essentially, I put $11,000 into here and I've been selling cash secured puts mostly on ASTS because that's one of the best companies I think that I could invest in. And it's also one with high IV, so it has a lot of premiums when you sell options. So you're going to see that this is the very start of my Robinhood, and I'm going to show you my whole history, essentially, where I just got the free bonus and just deposited some money, and then I started to add a little bit into it to experiment with selling cash secured puts. So we can see that in total, I put in 11,000, and I didn't keep 11,000 here the whole time through. This was a total of about 2 months of doing this, and I took out a little bit over time. So in the beginning it was 11,000, but over time I did take out some money. So yeah, we can see there was a lot of experimenting going on. This was my first withdrawal, so that takes it down to 10,000. And I'm gonna take a screenshot from my phone because it shows like the overall amount that I gained, and I believe it was 900 something. I'll put that on the screen, but it is 969.95. So in 2 months since August to October that I was doing this, I made 969 on 11,000, but I did take money out, so technically the return is a bit higher, but that gives about 4.5% return per month, which is a total about 9% in these 2 months that I've been doing it. So yeah, this was from August to October, and this was just experimenting with cash secured puts, and I definitely learned a lot, and it was very lucrative for this small amount of time. And what I didn't want was to do this long term on Robinhood, because the thing is, when you sell cash secured puts, your collateral, the money that you put away on Robinhood, doesn't earn interest. But I did just open a Fidelity account. So what happens in Fidelity is the collateral that you put down for your cash secured puts is kept in cash. So it's kept in the money market fund that's earning 4.2, 4.3% a year. And it's just, you might as well do it, right? If you're going to do it on Robinhood, you might as well do it on Fidelity instead, because you'll just be making a little bit extra interest on that cash that is just sitting there, right? So which stocks am I planning to do this on? I'm still going to do it on ASTS, and I'm going to do it on HIMS, and I'm going to do it on Celsius, as well as ELF. So 4 stocks, these are the 4 that I'm going to start off with. And the thing is, I really wish that they would go down a little bit. I wish that they'll be a little red when I start, because that's when the premiums are the best, when you sell them. So if you don't know what a cash secured put is, I'll just explain it really quickly. Basically, you're writing a contract and selling it to somebody that at a certain strike price and expiration date, you will buy 100 shares of the stock at that share price and expiration date. If the stock doesn't hit that price level and it stays above that price, then you just keep the premium that you're paid when you do sell that contract. So it's a good income generation tactic for cash that you have, extra cash that you want to invest, but it's definitely not as risky, in my opinion, as just buying the stock outright. You do have a cap on your upside, so if the stock were to go up dramatically, you don't get that upside. But I'm totally fine with that, because these are all companies that I'm invested in, so I already have exposure with them. I'm just trying to get some more income with this cash. So what I do plan to do is next week, I am going to sell probably all of my SGOV, and take probably 100,000 and put it into this Fidelity account where I will start selling cash secured puts. So I will show you exactly step by step how I'm doing this and keep you updated every day, every week, depending on how it goes. But I will just show you how I plan to do this. So with my calculations of how much return I should get, it's about 4% a month. So 4% a month on 100,000 is about $4,000. Now this is going to range month by month because of volatility, because of how the underlying stock moves, but overall it's going to be around 4% a month. And I'm pretty confident I can hit that. And long term, that'll be really good and allow me to grow the portfolio and the cash that I have just sitting here, right? Just something to keep in mind is selling cash secured puts is not free money. There's definitely a lot of risk involved depending on what stock you choose. These stocks that I've chosen, the 4 of them, are a little bit more volatile and a little bit more risky, but these are companies that I would invest in anyways, right? So I already have positions in a lot of them, ASTS, and this was the main company that I was selling cash secured puts on in Robinhood that allowed me to generate almost $1,000 in 2 months doing basically not that much. And that's the beauty of it. It really is very passive. You just have to learn how to do it, manage your position, manage your risk really well. I have seen other videos from like 3 years ago when people are teaching how to do cash secured puts, and I see the stock they chose like Workhorse. I'm like, oh man, like when they were doing it, Workhorse was at like $16. Now it's at $1. If they kept doing it on that stock, then it wouldn't have been very good. But this whole idea is just to find quality companies. I believe these are going to be good companies to invest in. So overall, it's good for me to sell cash secured puts on them. In the short term, what I plan to do in my Fidelity is just keep the money that I make in Fidelity. So the premium that I get, any kind of money that grows is just going to stay in Fidelity for the short term so that I can just grow this portfolio and hopefully generate pretty decent income month by month. And I'm really hoping that we see some red in these companies, at least in the short term, because I want to get the best premiums possible. And like I said earlier, it's best when the stock is red in the day. That means that the price is going down. That means that the premiums are going up. So it's definitely quite interesting seeing them so green today. I mean, it's good for my portfolio, that's for sure. But I would prefer that once I start, maybe next week or 2 weeks later, that they're a little bit more red. But overall, I think that long term, it will be just fine. And I have conviction in all 4 of these stocks. I think all 4 of them are in different sectors, and they are pretty well diversified, although very volatile and risky. But yeah, definitely ELF and Celsius I don't think are as risky as HIMS and ASTS. But we can see that ASTS is in a descending, kind of pattern. It occasionally has this shot upwards, and it just comes right back down. I'm expecting this to come back down, so I'm just going to wait for that before I sell any cash secured puts to maximize my income. But yeah, I will be updating you guys with my moves in that portfolio, continuing to show you what I do to generate income and make money. But cash secured puts is such a fantastic way to do it. And if I do get assigned on some of these companies, on some of these contracts that I do sell, I'm totally fine owning the shares and selling covered calls on them. So I did hear, from different sources that you do get a little bit more income with covered calls. But, I think it's just, if I have a mix of both in the portfolio and these good companies, then I think it'll be just fine. Yeah. So in conclusion, I hope this whole next step with this Fidelity portfolio is going to be really fun and really lucrative at the same time. I'm going to move the money there and just let it sit for a bit and wait for a good opportunity to start selling cash secured puts, because as we can see, everything is up today, and if it does continue going up, then that's totally fine. But I do expect some downward momentum in the next couple of weeks, and if we do see that, then that'll be perfect time for me to jump in, start those contracts, and start getting paid. this next part in the video, I'm just going to go over some details. If you're really into it, if you really want to learn a little bit more, I'm going to teach you a little bit more about cash secured puts, overall about options. And yeah, so if you want to learn more, this is just going to be me babbling on about things that I've learned and how to make money with options. So essentially there's two sides to options. There's option sellers and there's option buyers. What we're doing is selling options. So with buying options, it's more dependent on gambling. Yeah. So it's definitely lucrative and it's definitely possible to do very well with buying options, but it's not really in line with what I'm trying to do. So essentially, if you buy options, you're saying that at this time in 2 weeks, the price is going to be, down here. And if it does move down, then you make money. If it doesn't, then you don't make money. So that's about as simple as it gets with that explanation. Calls is the same thing. If you think the stock is going to go up within this time period, then you make money if it does. And if it doesn't, then you don't make money. So selling, you're on the opposite side of that. You get paid to make this contract. So if somebody wants to buy a put, they have to pay me, and basically you're the opposite side of that exchange. So in 2 weeks, if let's say that ASTS does hit 22.5, then I have to buy 100 shares of ASTS at this price. But I was already paid $80 for one contract. So hopefully that makes sense. It's very simple actually once you've understood it. There's plenty of resources. You can type it in Google and it'll explain it really well for you. But essentially what I'm going to be doing, what my strategy is, it's going to be selling between 0.2 to 0.3 delta of these puts. And I think that gives me a good safe spot to earn a lot of income and also not get assigned as often. I am expecting to get assigned sometimes, because what this means is essentially this is a percentage of how often you're going to get assigned. So with a 0.25 delta, you're going to get assigned once out of every 4 times. That's essentially what it means. So essentially this is also a theta play, because the closer you get to expiry with your option, the lower its value is going to drop, and it gets exponentially more so closer to expiration. So for example, if I got paid $80 for this 2-week contract, then I'm assuming that 2 days before it expires is going to be like $20 or something, or $10. So it's definitely going to decrease a lot. So this is good for me if I want to close the position and pay $10 to get out of the contract. So there's definitely a lot of things to keep in mind with selling these options, and there's a lot of options that you can do with the risk management. So if the price does crash a lot, let's say it goes down all the way to like $15, then this is going to be so much more. This is going to be maybe $200, $300, even $400 it could be. And buying back this option is just not going to be a good idea. So there's a lot of things you can do. You can roll the option to go way out in expiry, and that allows you to bring down the price of your strike. So there's a lot that you can do. So something nice about Fidelity's options chain, I'm starting to get used to it. Like at first I didn't like it, but that's because of how simple Robinhood's was, and it's just so gamified over there. But here, it's pretty nice. I like it. I'm starting to get used to it. The good thing is they show you the volume and open interest on the graph, like right here on the open. You don't have to click into each one to like see it, and they show you visually how much there is. So what I'm planning to do is just looking at which option has the most open interest and volume. This means that this option clearly has a lot of interest and potential buyers. So I'm probably going to sell this one or one lower, depending on how I feel during that day. And it's just going to be, keeping an eye on these different variables, the delta, keeping an eye on the volume and open interest, and then also just having a good understanding of your stock and how it's going to move. Those are all really important things to keep in mind with selling these options. Oh yeah, one thing that I forgot to talk about earlier was the date to expiry that I'm planning to work with. So when I start, I'm going to be working mostly with 2 to 3 weeks, because I found that this is the best time to utilize theta, because if you sell too close, then the value is already going to be really low because of all the theta action that's bringing down the price. So 2 to 3 weeks is a pretty good mix between getting the maximum premium and also just not having that theta involved in the beginning. So if you hold the contract for another week, another 2 weeks to expiry, then the theta is going to be really active and you're going to be lowering your contract price. So you can get out earlier if you want to, roll the option, depends on what you want to do. So yeah, usually when I did it in Robinhood, I wouldn't hold until expiry. There was only one time that I did, and even then I closed it on expiration date just to move it further. So you don't actually have to hold it for this maximum amount of time. So yeah, I'm really excited to get started with doing this on Fidelity. I think that it's a really good place to do it instead of Robinhood, because you get that extra little money from your cash just, staying there. So hope you guys learned something today, and hopefully you guys keep updated with what I'm going to do with this portfolio, and let's just make more money. So hope you guys do good, and I'll see you guys next time. Bye.